This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Wednesday, July 1, 2026, and this is the Tokyo session. Now, let's get into it. We are looking at a market where the aggregate mood is screaming panic, yet the price action is quietly churning higher. We've got total market cap up 26% on the day, but the fear and greed index is stuck at 14. That's extreme fear. How do we reconcile a green portfolio with a red psyche? Before we dig into the divergence, let's look at the structural forces shaping this evening. Bitcoin is sitting at $60,415, up 3.24%, but beneath that price lies a void in derivatives demand that has hit lows not seen since early 2024. Meanwhile, the altcoin sector is staging a coordinated breakout, with Solana jumping 6.14% to 77.79 and Stellar climbing 8.37% to 19 cents 9 mil. This isn't a broad rally, it's a rotation. And the catalyst driving the volume? PayPay, the 40% owner of Binance Japan, is pursuing a $1.1 billion Nasdaq IPO, injecting Asian liquidity into a market that otherwise looks risk-averse. That's the core anomaly. You're seeing a 14 on the fear and greed scale, the lowest end of the spectrum, and yet we aren't seeing capitulation. We're seeing redistribution. The 20.66% gain in total market cap contradicts the sentiment data. Usually, extreme fear kills volume. Here, volume is 86.47 billion. That means the fear isn't keeping people out. It's pushing them into smaller, higher beta vehicles. Retail isn't buying Bitcoin here. They're buying Solana and Cardano because the narrative has shifted away from safety.
And that narrative shift is visible on the charts. Look at Bitcoin. It's consolidating in a tight box around 60,000 to 61,000. But look at Solana. It is broken above the $75 psychological resistance, closing at 77.79. That's a valid breakout structure. Cardano has invalidated its recent lower high structure with an 8.21% jump to 16 cents. These aren't random ticks. They are technical breakouts occurring while Bitcoin acts as a dead weight.
I need to qualify that breakout though. Grid is calling it organic strength, but the flow data tells me this is liquidity-driven, not fundamentals-driven. Bitcoin futures demand has collapsed to 2024 lows. There is no institutional leverage supporting the $60,000 price. What we're seeing in Solana and Cardano is the result of the PayPay IPO announcement. That $1.1 billion listing search is funneling Japanese retail capital into specific L1 chains. It's not that Solana is fundamentally stronger today. It's that PayPay's marketing and user base are rotating traffic there.
Which brings us to the elephant in the room, the geopolitical distortion. We can't ignore that Iranian crypto outflows have spiked 700% following recent airstrikes. When you have a 700% spike in state-level or conflict-driven capital flight, your volume metrics are compromised. $86 billion in volume might look like healthy retail participation, but a significant chunk of that is likely chaotic, non-market-driven supply seeking refuge, and paired with Bitcoin futures demand vanishing. That's not accumulation. That's a vacuum waiting to be filled or emptied rapidly.
So we have a structural divergence. Equities are calm, with the VIX at 17.65, while crypto sentiment is in freefall. Let's isolate the biggest mover, Solana. It's leading the charge at 77.79, up 6.14%. Grid, walk us through the structure here. Is this breakout durable given the macro backdrop?
Structurally, yes, but it's fragile. Solana closed above the $75 pivot, which had acted as major resistance for months. The current price of 77.79 puts it near the 24-hour high of 78.52. The next technical hurdle is a daily close above that 78.50 mark. If it holds, the relative strength against Bitcoin is confirmed. However, note the volume profile. While the price moved up, Bitcoin's move was merely plus 3.24% with no volume expansion. Solana's move is faster, sharper, but in a low-volume Bitcoin environment, it's susceptible to sharp retracements if the broader risk appetite cools.
And that cooldown is imminent if the pay-pay narrative fades. My flow data shows that the capital entering Solana is heavily correlated with exchange-side inflows linked to the IPO anticipation. Once that event passes, or if the IPO details don't meet expectations, that liquidity could evaporate. Compare this to Bitcoin, where open interest is contracting. In Solana, open interest is expanding, but it's retail-heavy. Without the institutional backbone present during previous rallies, this move is speculative fuel, not structural support.
Speculative fuel runs hot and fast. And remember, we have a 700% spike in Iranian outflows. If that capital is flowing into Solana as a transit hub or storage vessel, then the price action is artificial. You're watching a chart that is being drawn by geopolitical necessity, not economic merit. If those funds move elsewhere, Solana doesn't just correct, it gaps down. The VIX is low for stocks, but for crypto, the implied volatility is being suppressed by this very specific, non-standard liquidity event.
Let's pivot to the second leader in this rotation, Cardano. Up 8.21% to 16 cents. It's outperforming Bitcoin's 32% gain significantly. Grid, what does the technical picture suggest about sustainability here?
Cardano has broken a descending wedge pattern that had been in it for weeks. The move to 16 cents cleared the 90-cent level, a key psychological barrier that has held for months. The velocity here is impressive, but look at the relative strength line against Bitcoin. It's spiking vertically. That usually invites mean reversion. Unless Bitcoin stabilizes above 61,000, Cardano's breakout risks becoming a dead cat bounce within a larger downtrend. The technicals say buy the breakout, but the volume context suggests it's a short-term squeeze, not a trend reversal.
I disagree with the dead cat characterization based on sentiment heat maps. Community engagement metrics for Cardano are at their highest point in 6 months, unrelated to the broader market noise. People are talking about the technical upgrade cycles, not just the price. When sentiment rises from such a low base, 14 on the Fear and Greed Index, it tends to persist until it hits a wall. The fact that Cardano is up 8%, while Bitcoin is up 3%, suggests the retail crowd has actively abandoned Bitcoin for this specific narrative. They believe they found the next platform before everyone else did.
Narrative doesn't pay the server costs. The on-chain data shows that while address counts are rising, whale wallet movements into Cardano are mixed. Some long-dormant wallets are waking up, yes, but many are distributing to exchanges. That's distribution disguised as activity. Meanwhile, look at XLM, which is also up 8.37% to 19 cents 9 mil. That's a utility play tied to payment corridors. Cardano feels more like a speculative bet on code upgrades. If the pay-pay liquidity dries up, Cardano loses its tailwind. It's riding the same wave as Solana, dependent on that Asian IPO catalyst.
Here's the risk. If the pay-pay IPO encounters regulatory delays, which is common for Nasdaq listings involving Asian entities, the entire altcoin rotation could reverse simultaneously. You have Solana, Cardano, and Stellar all pumping on similar liquidity themes. If that tap closes, you don't get a slow bleed. You get a synchronized sell-off because these assets are highly correlated in this speculative phase. The Bitcoin futures data confirms there's no hedge against this. Everyone is long spot. No one is hedging with options. One bad headline or a shift in the Iranian capital flow, and the downside is unprotected.
Let's look at the asset most detached from this frenzy, Bitcoin itself. At $60,415, it's up 3.24%, but the futures demand is at 2024 lows. Is this consolidation or exhaustion?
It's consolidation. The price is bounded between 60,000 and 61,000. The Bollinger Bands are tightening, indicating a compression phase. Normally, this precedes a directional move. Given that alts are surging, the expectation is a breakout for Bitcoin, but the volume is absent. Without volume, any upward move is suspect. I'm marking 60,000 as hard support. If we lose that, the consolidation breaks downward. But as long as we hold above 60,000, the structure is neutral.
Neutral doesn't mean safe. The collapse in futures demand means that buyers at 60,000 are relying entirely on spot orders. There's no leverage layer cushioning the fall. If a large holder decides to dump spot inventory, there are fewer leveraged longs to absorb the shock. The institutional exit signal here is stark. They aren't betting on direction anymore. They're stepping aside. That leaves the price discovery process entirely to the retail and semi-institutional players chasing the altcoin narrative.
But that's why the fear and greed is at 14. The smart money is stepping aside, and the crowd is panicking, yet buying anyway. That's the definition of a contrarian setup. The panic is real, but the buying is also real. The divergence between the F and G score and the price action proves that fear hasn't stopped trading. It's just changed venue. People are scared of Bitcoin, so they're buying Solana. That's not weakness. That's a reallocation of risk tolerance.
Or it's a scramble for exits. When the fear gauge is at 14, the average participant is trying to minimize losses. If they think Bitcoin is the sinking ship, they might be parachuting onto the lifeboats of high-beta alts. That's not confidence, it's desperation. And desperation runs out of steam quickly. Watch for volume drying up on the upside. If Solana tries to push past 78.52 on lower volume, that's the moment the desperation trade flips into a stop-loss cascade.
Let's touch on the broader market context. The VIX is at 17.65, well below the stress threshold of 20. Yet crypto is in extreme fear. How do we interpret this gap?
This is the defining feature of the session. The VIX at 17.65 indicates that traditional risk assets are calm, perhaps even complacent, but crypto is at 14, which is extreme distress. This mismatch creates an arbitrage window. Historically, when VIX is low and crypto fear is high, crypto tends to outperform as it catches up to macro reality. However, Apex notes that this only works if the underlying liquidity is genuine. We see that liquidity concentrated in the pay IPO-linked chains. So the catch-up trade applies selectively to Solana, Cardano, and XLM, while Bitcoin remains stagnant due to the lack of institutional derivatives support.
I'd add that technically, the VIX/crypto fear spread often precedes a volatility expansion in crypto. When the two diverge this sharply, the eventual convergence usually involves crypto volatility spiking upward. Whether that spike goes up or down depends on whether alts can sustain their breakout. If Solana rejects at 78.52, the volatility spike will be to the downside.
Agreed, the flow data supports a volatility expansion. The disconnect between the stable VIX and the collapsing Bitcoin futures basis suggests that the current equilibrium is artificial. It's maintained by the IPO narrative. Once that narrative is priced in, expect volatility to return to match the fear gauge. Until then, we're in a bubble of calm.
Let's circle back to Ripple. It's up 2.12% to 106 cents. It's quiet compared to the L1s. Any flow signals there?
Minimal. XRP is largely tracking general market beta without its own catalyst. Unlike Solana or Cardano, it doesn't have a specific IPO or upgrade narrative driving volume right now. It's a hold, not a play in this environment.
Technically, 106 cents is testing local resistance, but without volume expansion, it's unlikely to break out independently. It's a follower, not a leader.
Sentiment-wise, XRP is flat. No community buzz, no narrative shift. It's just along for the ride. Finally, let's look at Chainlink. Up 3.79% to $7.44. TD Securities recently noted NYSE tokenization as an institutional turning point. Does this reflect in Link's data?
That's a longer-term narrative, not a driver of today's volume. The tokenization talk is institutional chatter, but actual flow into Link is modest. It's benefiting from general decentralized finance optimism, but it's not the center of the liquidity storm like Solana. The data shows steady, institutional-grade accumulation, not the frantic retail churn we see elsewhere.
$7.44 is approaching the upper band of its recent range. It's a strong, steady uptrend unlike the explosive moves in alts. It's a defensive growth play in this sector rotation.
To wrap up, we have a market defined by contradiction. Sentiment is at rock bottom, yet prices are rising. Bitcoin is stagnant due to a lack of futures demand, while alts are surging on specific liquidity injections from the pay IPO narrative. The VIX is low, but crypto fear is high. The risk is that this divergence snaps, either through a geopolitical shock from the Iranian outflows or a simple fading of the IPO hype. For now, the data shows a clear rotation. Avoid the stagnant Bitcoin anchor, respect the technical breakout in Solana and Cardano, but be wary of the fragility created by the absence of institutional leverage. This is ShadowQuant Crypto Edition. Remember, this analysis describes current market conditions and does not constitute financial advice. Monitor the pay developments and the stability of Bitcoin's $60,000 support. Stay disciplined. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the London session, where we will see how these calls play out. Until then, trade safe.